Hello everyone, my name is Anomaly. Thank you for joining me for another video on the $5 Journey YouTube channel. Okay, make sure you check me out on Twitter. Make sure you check me out on Facebook, the $5 Journey. On Twitter, I'm at Anomaly 197711. Also, you can feel free to message me at any point on Outlook.com. I'm at Anomaly1977 at Outlook.com. So you have Twitter, Facebook, you have YouTube, and you have Outlook. Okay, feel free to message me, leave some comments below, whatever you like. Thumbs up the video if you can, that's fine. Make sure you pay it forward if you find that any of the videos that I do are helpful. If you find that the book is helpful in any kind of way, pay it forward. Let's try to help out the 90%. My channel is really all about helping out the working class, the working poor, those who are not familiar with investing at all, people who don't invest anything, or maybe they have a lot of questions about investing. They're trying to figure out how they can get their feet wet, so to speak. So my channel is based off of that. I am not a financial advisor. I'm not a CPA. I'm not a stockbroker or anything like that. I have no Series 7s or any of those other series license. I'm just a person who, I've been investing probably now for over 20 years actually, in different things. I started trading stock options when I was 18 years old. I started trading stock also around the same age. It was I made a big boo-boo myself when I was, as many of you know, I was a science major, biology, and one of my biochemistry professors, he would come in and he would give all these different stock, advice and things like that. And I was playing around the stock market a little bit, and he said, "Oh yeah, there's this new company out, or this company that's been out for a little bit, but the stock are really low right now. I really think this company is going to take off. The name is Google, right?" And I knew of Google, I heard about it, whatever. And I at the time I had a few $100s that I could invest. And I took that few $100, I bought some Google stock, and it was when it was low. It wasn't over $20 per share, I can tell you that right now. And what happened was, I saw it go up, and I don't know what it went up to, but let's say it doubled. And I said to myself, "Oh man, I made a really good amount." This is back in the 90s, by the way. So I said, "Oh man, I made a really good amount." I was a broke college student, so making an extra few $100s just off of stock or something, it was kind of like, "Oh, you found the holy grail of stock." So I said, "Okay, they're not going to go up anymore. I'm going to sell this off," and that was that. I made a decent profit for a broke college student. Of course, I kick myself every time I see, how well Google is doing and that kind of thing. So, point is, I've been investing for a long time, all right? And, in the book, The $5 Journey, as well as some of the stuff that I will share on the YouTube channel and Facebook, I'll share some of the mistakes and, hiccups and barriers that I've run into, and, that kind of thing. In the $5 Journey, I mentioned about mutual funds, right? So I talked about that, and I did another video on mutual funds. I will try to put the link to that in the caption below. I'm not a YouTube expert or anything like that. And sometimes I get a little absent-minded, all right? So please forgive me for that, but I will try to remember to put the link for the other mutual funds YouTube video that I made. But anyways, I wanted to give you guys a really, a somewhat, picturesque understanding of mutual funds, okay? Just in case I didn't do as well of a job as I probably should have explaining it before. So companies, a lot of times when they get big enough, when they have acquired enough money, what they do in order to generate more money is they start selling stock. What are stocks? Stock are basically the real quick, dirty, easy kind of way is stock represents a piece of their company. So, if someone ever says, "Oh, are you a business owner?" Or do you have a business or anything like that? And you say, "No, I don't. I don't have time between the kids and work and school and whatever else." But you own stock, then you're lying actually, because if you own stock, you also own a piece of a business, all right? It may not be the whole thing or the majority of the business, but you are a business owner in a way. So a lot of companies, there's like companies like Dell, Microsoft, Google, okay? There's a bunch of different companies that have stock, all right? And so that represents a portion of the company. Right? Now, what a mutual fund is basically it's like a basket almost, right? And and in that basket is a collection of companies, stock from those companies. Okay, and really what a mutual fund does, one of the things that I really like about it is I look at it as like a buffer for risk. Okay, so what do I mean by risk? What I mean is that if I invest in one stock, like let's say I invest in, I don't know, XYZ company stock, all right, and the stock is doing really well. I bought it at $5. I don't know, let's say $5 a share, right? It shoots up to $20 a share, right? And that's the only stock I have. That's what I've been banking on. That's what I'm gonna go get a new pool put in the backyard and finally go fix my car once I sell this stock off, right? I can do all these wonderful things, right? But then something happens in the market, right? And there's a downturn and the stock plummets downwards, right? And I'm like, okay, well, it'll rebound, and it never rebounds, right? And then you receive an email from the company, or you see something on the news saying, "Oh, this company filed for bankruptcy," and blah blah blah. Well, there goes your stock, right? So it's a risk. It's a risk when you invest in just one thing. All right. Now, with a mutual fund, it buffers a risk, so it helps to prevent, like just a crash. So if let's say you have company in XY, you have stock in X, Y, and Z company, but you have also stock in ABC company, and then you have stock in like, I don't know, LMNOP company, okay? So you have stock in those three companies, right? And, stock in XYZ company goes down, oh no, but because you have the mutual fund with, stock from XYZ, stock from ABC, stock from LMNOP, right? If you have those kinds of stock, just because one of the stock goes down, your mutual fund still may be going up in value because the other two companies may be going up. So what it does is it kind of spreads out the risk. All right, they call it diversification. So it spreads it out. It just doesn't keep it in one place. All right, now, how I'm choosing to illustrate that is by these two wonderful pictures. Now, I am not an artist, okay, so please forgive me. So you have two cubes here, all right? Let's pretend these two cubes are the same weight. All right, 200 pounds here, 200-pound cinder blocks, okay? Let's pretend that. All right, now over here it represents a stock. Okay, see this big, kind of black pillar. All right, so you have this pillar. It is capable of holding 200 pounds, right? Steady and firm. All right, and it's holding it up nice and in place. All right, that would represent our stock. So one company, one stock, right? This one over here, all right, these are my little legs here. All right, it doesn't have one big pillar like this one, but it has a bunch of smaller ones, actually 20 to be exact, okay? And it also holds up the 200-pound cinder block. Now, if this, let's say, okay, so it's five on each side, so it's a total of 20. This has one. All right. Now, which would you rather have? Okay. Would you rather have this one with one, or would you have this one with many? Now, before you answer, think about this with me. All right. If something happens to this one, all right, let's say it cracks, all right, it breaks, I don't know, it's a storm, something comes along, right, and it causes this to break, all right, that means that, even though it may be strong, if there's a crack in it, if it breaks, boom, the whole thing comes down, all right. Now, this one over here, let's say one of these legs cracks or breaks. Well, the whole thing's not going to come tumbling down, all right? Because you have the weight being carried by a bunch of different kind of legs, as opposed to this one. It's a thicker leg, but it's only one. As opposed to this one, it's many. That's the thing with mutual funds versus stock. All right, now this is not an anti-stock video, okay? So don't think that I'm railing against stock, because I have stock myself. I think stock are really good things. And let's see, what kind of stock? I mean, basically I just kind of go with, what it seems like the, what's popular, I guess, or what is offering, I guess, good prospects for the future. Okay, one of those things, let's see, probably technology. So I have technology stocks. What else? Pharmaceuticals, right? I have pharmaceutical stock. All right, so there are a lot of different. So that's basically how I pick my stock. If you want to know what's in my stock portfolio, feel free to shoot me an email or something like that, or hit me on Facebook, or that kind of thing, and I'd be more than happy to share. I will say pharmaceuticals and definitely technology companies. Okay, absolutely. All right. But anyways, so going back to this, so that's the difference between having a stock and having a mutual fund. When you have a stock, you pretty much have all of your eggs in one basket. Now, here's the thing. Okay, so with stock, can you buy more than one type of stock? Absolutely, absolutely. I just finished saying that I have multiple stock, right? Multiple different companies, right? Multiple different industries. So I have that. But again, it's diversified. So I've spread out my risk. All right. Mutual funds, it's kind of like having, so how I have it, right? Let's say stock represents, I don't know, one, an egg or whatever, and I have a basket with one egg in it, right? So I have a few different baskets, each with an egg in it, okay? Now, if I drop one of the baskets, then I have a few other baskets with eggs in it, right? So those, so I kind of spread out my risk. With mutual funds, what you do is you have several baskets with several eggs in each one, all right? So you spread out your risk even more, okay? Also, what I would say too is for people who are just beginning, people who are just getting started on their journey to financial progression, right? What I would say is I think that getting the proper financial advisor, getting the proper broker, the proper accountant together in place is essential before you start, really delving into stock on a serious level, all right? And, I'm not saying that it's a necessity, but I think that, for your own good, it's probably good to at least talk to a financial advisor or something, someone that you could trust, all right? Not, some of these guys, they just want to like sell you some stuff. You need someone who you can trust. If you guys need a financial advisor, you hit me on my Outlook, right? Anomaly 1977 at outlook.com. All right, ANOMALY 1977 at outlook.com. Okay, and I'll be glad to send you, my people who have been wonderful. So my accountant, awesome. My financial advisor, awesome. right? They've never led, let me not say never really, they've never actually led me wrong. My financial advisor I've been working with now for probably about 13 years. My accountant I've been working with, that particular accountant I've been working with probably for about 6 years. But I've known him for several years even prior to that. So, I knew he was a person of integrity and stuff like that. So you want to make sure that you get involved with folk like that. With a CPA, you are going to pay, a little bit more, but I mean the savings and the advice and everything is priceless. Okay, so just to give you an example, when I was doing taxes on my own, right, and I'd go to some of these quick tax, you go to the Jackson Hewitts and the different other kind of companies, whatever, and you would file your taxes through there. I don't know, maybe get a refund of whatever, maybe $1,000, $2,000 or something like that. Once I started going into business ownership and investments and things like that, now I had more money coming in, more taxable income. I had to worry about something called capital gains, right? Maybe we'll do a video about that. And I would have actually ended up had I continued along the route that I was doing taxes on my own and, going to some of these other places, I would have probably had to pay out a few $100s actually. But going to my accountant, dealing with my financial advisor, getting good advice and everything, I actually was able to get money back, all right, and a decent amount of, at that. So that's one of the things I really advise. Having mutual funds, going back to the egg in the basket analogy, is having several baskets with several eggs in it, right? So even if you drop one, let's just say, one egg in the basket drops out of the several eggs, you're still bolstered up by all those other eggs, right? None of those other eggs have cracked. So, you always hear the term, don't put all of your eggs in one basket, right? So you have a bunch of eggs, a bunch of stock in one basket, then you have a bunch of eggs, a bunch of stock in another basket, and same thing, you have several baskets. So if one egg falls out of the basket, you have that other basket that's going to hook you up. Mutual funds. Now, what do I do as far as that goes? Again, talk to your financial advisor. I use, and I'm not getting paid by these people, not yet at least. All right, I will definitely let you guys know if they are paying me, because you know what? Unfortunately, I went through one of the best high schools in the country, probably one of the best high schools in the world. I went to a really, really good college. So I went to Lawrenceville as far as my high school goes. I went to Rutgers University as far as undergraduate. I went to Stevens Institute of Technology, the Howe School of Business for my business degree in pharmaceutical management, my graduate business degree. And then I went to Stevens Institute of Technology for my the Graduate School of Engineering for my Master's of Science degree in pharmaceutical manufacturing. None of those places taught me about mutual funds, all right? None of those places did. So you want to make sure that you educate yourself as best as possible. Hook up with a financial advisor. That's all they do. They day in, day out, they're married to this stuff. They're passionate about it. They will tell you about mutual funds. They will tell you about annuities. They will tell you about stock. They will tell you about IRAs. They will tell you about, all these different things. Get yourself a good accountant also who will tell you about these things too. So that's my thing. Remember the main focus here. Experienced investors, definitely, you're more than welcome. Pick up a book, take a look at it. Maybe there's some things in there that you feel are very elementary to you, which I wouldn't be surprised if you're an experienced investor. But just remember, this stuff is for people who who are just getting by, maybe not even getting by, and this is offering a roadmap, a strategy to bring them to the point where they're able to invest $5 a day up to $500 per week, right? And have that money grow, right? Even when they are sleeping, even when you are working your other job, right? Your money is growing without you being there. This is one of those ways that it can grow, through mutual funds. All right. My financial advisor, he's through AXA Equitable, and I have several kinds of mutual fund accounts with them. I have several types of annuities, and let's see what else. Also an IRA with them. My stock I do on my own. Some of my other mutual funds I do kind of on my own also. So, you want to try to diversify as much as possible. Also, REITs are really good. We'll get into a little bit more of that later on. I think I spoke to you guys about REITs already. Spoke to you guys about mutual funds. You just got to figure out how you're going to make that hustle, that side hustle, and use that compound hustle, that knowledge and everything to take you to that next level. One of the things that, let me actually just talk about this real quick. A lot of times what I found about several people that I've come across, I'd say probably most people that I've come across actually, is, and I was this way too, is that we look at what we can't do versus what we can do. So here's an example, all right? When I first learned about mutual funds, I said, oh, well, I can't invest $10,000 because I don't have $10,000 to invest. I can't buy, thousands of dollars worth of stock because I don't have thousands of dollars to invest, right? I can't buy real estate because I don't have the money to buy real estate. So I used to focus on the can'ts, right? And that's what a lot of people do. They say, I can't do this, I can't do that, I can't do that, and really what ends up happening is you live a subpar life. There's always there's these talents that are trapped inside you that you really want to get out, but you're so stuck on the can'ts. That's why the $5 journey has to do with a mindset change. Instead of focusing on what you can't do, on the can'ts, focus on what you can do. All right. So I can't buy this, this real estate. I can't invest in real estate because, I need $10,000 in order to start investing. Okay. All right. So I don't have $10,000, but let me not focus on what I can't do. Let me focus on what I can do. What I can do is, that guy Anomaly was talking about getting a side hustle and doing this and using compound interest and all this other, and the power of 72. Okay, so what I can do is I can start investing $5 a day, right? Which I will put into into an Acorns account or a stash account or something like that will take my $5, right? And in turn, it will help to grow that money, right? Maybe a small growth, but it'll still help to grow. So I can do that. I can keep investing every day, right? I can keep making these moves. Oh, there's something that I'm passionate about. I like to draw, or I like to teach, or I like to dance, or I like to, so I'm going to teach people about these passions. So I can do that so that I can make additional money, so that I can put it into these financial vehicles, so that once it builds up, I can actually invest in this real estate that I need $10,000 for, right? So you want to make sure, still don't focus so much on what you can't do. What you can't do will leave you nowhere, right? It'll leave you with nothing at the end of the day. Focus on what you can do, all right? Take whatever your passions are, whatever your talents are, you focus on those things. Figure out how using those things can actually bring you money, bring you finances. And again, I hope I don't have to say this too much, but you don't want it to be something that's unscrupulous. You don't want it to be something that's nefarious. You don't want it to be something that is like underhanded, where you're screwing people, or you're, throwing old ladies out on the street or something like that. You don't want it to be anything where you're a jerk. You don't want to rip people off or anything like that, okay? That kind of stuff doesn't pay. It may pay out financially in the short term, but it doesn't do anything for your soul. It doesn't do anything for your ability to sleep at night. It doesn't do anything for character development, morality development. So you want to make sure that you keep everything in context. All right. This is not necessarily for the short term. Remember, I say it's called the $5 journey for a reason, because it's not a quick and easy thing, right? It can be fairly easy, but not necessarily quick. All right, so you want to make sure that you keep all those things in mind. Focus on the cans, not on the can'ts. Here's the thing about mutual funds, and feel free to leave any comments below. All right, thanks so much for checking in, and have a great rest of the day. I hope you guys get something from this, and remember to pay it forward. Okay, thanks. Bye.